Okay, so last week I put a lot of emphasis on the Bitcoin markets and this massive parabola that we're forming on the larger time frame. Like I had mentioned yesterday, I said that I highly doubt that this was the top, and this is most likely just a first correction on the way up, right? Last week, I sent out a trade alert where I did some house cleanup, which is basically I locked in a bunch of profit on a bunch of altcoins. I didn't go all out, but I shifted 80% of, I went all out on some things, but I shifted 80% into Bitcoin for the very reason that we're seeing right now in the markets. I did keep some of my top coins. For example, my largest altcoin bag is Ethereum Classic, so we're going to get into that. And I wanted to keep some just for diversification. I kept some mid to low caps because they were pretty cheap as far as market capitalization. I still kept a bit of Golem just as a long-term investment, even though I sold half of my position into Strength. I sold, 35% of my Ethereum Classic position into Strength. Played around with the potential of a dip buy, or bought a dip today, but we'll get into that. So on Bitcoin, and I didn't, on some of those markets, I actually exited a little bit early. I was a little bit ahead of the game. There was basically a massive pump. Usually what happens is Bitcoin will break out the all-time highs and then we'll immediately start to get some blood. This was a delayed reaction. I think a lot of traders just weren't really taking this Bitcoin rally very seriously, right? Now that we're creeping up towards 2000, like I said, 2000's that FOMO level, fear missing out, where it really sinks in that Bitcoin's on a potentially one of the biggest bull moves that it's made in years. So if I were to, like I'd mentioned before, if I were to, draw a parabola shape, and I had an entire lesson on this. Basically, the breakout point is it starts to go vertical. And, this is also, you could also call this like a cup and handle formation. I'm just drawing some lines just to show you the shape here. But basically, it came out, it broke out, it pulled back to create a handle, and now it broke out again, right? And like I said, like usually these kind of measured moves, are on a normal trend are healthy. I mean, here you see a period of 6 months of consolidation, 6 months of consolidation. Consolidation periods shorten. We just create these V-bottom breakouts. And now it looks like we're going parabolic on the larger trend. And if we were to use fib extensions, basically, if we were to pull off the exact same move that we did in 2013, now that'll be more challenging because in 2013 you had less liquidity, less exchanges, so on and so forth. But like I mentioned, 2000 is the next major resistance level. If we had a big correction at 1.618 extension, if we had a massive correction, and if this was the local top for this trend, then I would expect a big pullback down to like prior resistance at that level. And that would keep the trend healthy, because then that would keep things in alignment with this trend line right here, right? But that's in a normal, healthy trend. What could end up happening is we could hit some resistance here, but if we pull off a similar move as 2013, then the price would end up hitting 4,000. That's about the same level of movement that 2013 pulled off, right? Now, something to keep in mind, that seems like a huge price leap. That seems like a huge price jump. But there comes a point, I mentioned this earlier yesterday, but I'll mention it today for the video, is if we break 2000 resistance, we'll likely hit a point of accelerated momentum for a parabolic blowout, right? And so if you look at that, it's all scale, right? I mean, this move over here made a 70% move down here. If we break 2000, to get to 3000 is only a 50% gain, essentially, right? If we break that 2000 level. So when you're dealing with percentages, obviously the types of percentages we've seen in many other markets and many coins and such, 50% isn't a lot, right? So once you break the multiples of thousands, and you're not just in the 1000 mark and in between, but you start creating multiples of 1000, psychologically, starting to do leaps of $1,000 is doesn't take much at that point, right? That's, you come a point in the market where $1,000 becomes the new 100 in Bitcoin, right? But I would say if we correct here and pull back, then okay, the overall larger trend is healthy. All right, so we could probably still continue playing this game. If we hit that parabolic blowout, I have an exit strategy, which is basically I sell into strength all the way up at different areas. Definitely I would take a lot of profit off of the table at the 3000 area. I would still take some profit off the table at the 2000 area. I would still sell some at the 4,000. Basically, my game plan is the higher the price goes, the more Bitcoin I'm going to sell on the spot markets to pull out hard cash off the table into my bank. And the reason why I say that is because a parabolic blowout usually spells the end of the bull trend, right? Notice how the angles shift, right? Oh, it's all healthy. Everything's nice. We've got a nice, healthy, cute angle. Then the angle gets a little bit more steep. Now the angle's going vertical, right? It's that vertical blowout. If we don't have a big correction and consolidate, that vertical blowout will likely spell the end of the bull trend, as I've been mentioning. Just like in 2013, as soon as we had that massive blowout and it shot up from 100 to over 1,000 in a month, that was the end. And we corrected and we had a big crash, right? Well, if we hit to 3,000 or 4,000, then the eventual crash will likely find support at this area, right? Overall, once we hit capitulation, if we went that high, capitulation would probably look like a stab down to the 1,000 area type of thing if we made a ridiculous move. Now, it's possible we might not do that. It's possible we could get anything in between. But what I'm doing is I'm preparing for that possibility. Now, we've seen a lot of blood in altcoins, and Ethereum Classic is my largest bag right now, and I jumped in the room before this video. I told people I bought the dip and it's bouncing, and I'll show you why I bought the dip for the bounce play. And I am going to take some more Ethereum Classic profit off of the table. You see, the reason why I don't necessarily, there's a couple of good areas where one could have exited. There's this immediate trend line right here. Oops. There was, let me just, okay, so there's a immediate one. There's a couple of lines. There's one right here. This would be the immediate one for an exit, potential exit. But I didn't necessarily panic sell as we were breaking down yesterday, and this was the support. And you could do this. You could exit when support breaks, and some people probably did this. But what I did, because I had basically on Poloniex, I just have Bitcoin sitting there. What I did and what I said yesterday is I said, okay, if it wants to dump, let it bleed, right? What I'll do is I'll buy a dip, and let me just take a peek where I bought that dip. I'll just look at the price right now. Poloniex is basically the first thing I did when I logged in this morning. So my trade's saying I bought the dip at 32.57. So I bought the dip right here. So that's currently in profit right now, and this is bouncing. Now here's what I'm going to do, right? I turn lemons into lemonades. Okay, so you guys know I love to buy the bounce plays, right? Obviously, when the price is this deep in the red, you do not want to be that person just like selling. And sometimes and here's the thing, sometimes you'll see it breaking down. Like I've done this before. I'll see something breaking down and I'll sell. And it turns out that was a bounced off support. And, I sold near the bottom. I mean, that happens, right? When you try to exit on a breakdown, that can happen sometimes. In this instance, when you see such deep blood, it's generally a good idea not to sell at the bottom. And my reasoning for buying the dip there is because we have this classic prior, resistance turn support, right? And if I were to look at the larger trend from the last move, so we kind of bounced between 50 to 61.8% or dumped to that area. Now here's my current plan, right? Now that we've made that move, my next plan is, where do I want to exit this specific bounce play? I think that the 4,000 mark right here is a nice round area that brings us between 50 and 61.8% on the bounce play. Not only will I take profit and close out on this bounce play, this immediate trade, but I'll also take some more profit off of the table from my Ethereum Classic position. Now, I don't intend on going all out, but I'll probably sell perhaps another maybe 20 or 30%, reduce my position size, my exposure, right? Also, you can see, I'm just kind of seeing right now, let's see if this almost creates a trend line. Almost. If we cut this out, I mean, the charts don't have to be pretty to be profitable or perfect, right? It's a general concept and idea. Right, so obviously Ethereum Classic is my main focus as far as markets. Now, we had a round. I'm just going to look at Gnosis too. We had one final parabolic round over the weekend, a parabolic blowout on a lot of altcoins. Okay, so Gnosis also did something similar and is bleeding out. So, anytime I see strong weakness like this in Bitcoin on a trend, there's you could use these bounce plays. Oh, sorry, not Gnosis, my bad, Golem. I keep on messing up the name. You see, you could use bounce plays as an exit, right? You can use bounce plays as an exit. That's why I never really sweat over markets breaking down or whatever, even if basically I know that the harder they dump, the bigger the bounce. So if you didn't get out and you wanted to and you didn't get out in a breakdown, just wait for that bounce play, wait for it to come up to 50 to 61.8%, and then you could exit more of your position if you should so choose. For myself, the Golem that I have, my remaining position, which I bought all the way down here, I'm just going to keep that just for a little bit of diversification. I sold into strength on half of that position right around 1700. Pretty much nailed that one, right? Same with the classic target. So I'm not, terribly, made some good profit off of that, locked into Bitcoin. So I'm not terribly concerned about this, even if it bleeds down a little bit more. I mean, I'm not any worse off than I was when the price was down here and I was holding, right? And I did sell half my position. So anyways, we're getting a lot of different types of bounce plays. More of my mid cap positions. I'm just holding. You know, edgeless isn't doing a whole lot of much. Now, this weekend, a lot of markets were rallying and pumping this weekend, and I purposely decided not to trade. You know, I've been mentioning this many times. One day you go to chase the breakout on these parabolic pumps, and you end up buying the top. There has to come a point where you need to be disciplined as a trader and not necessarily have to catch every single move, but to be satisfied in being up in profit and to take a step back and let things cool down a bit while everybody else chases. So I guarantee you a lot of people who were likely chasing the markets yesterday and over the weekend probably got burnt today and lost money. So time broke out. We've got prior resistance kind of turning support. Still not a very liquid market, so I'm just holding it for now. Even if it stays stable, it'll go up dollar-wise. So my mid caps, I'm not really interested in selling. These are more longer term plays. I like to have some that are slow cookers too, so that I'm not, so not everything is going up at the same time. Loon had a bit of a sell-off, and I would basically say that there's a lot of opportunity in the markets to catch bounce plays on moments like this. So while everybody else is panicking, I'm not necessarily saying catch the bounce plays for a swing trade necessarily, or for as long-term trade. It could just be dip, 20% bounces or whatever as a day trade. Usually when the prices are really, really high, I have quicker targets on the bounce plays when the market's really high. I just want to look at XRP here for a second because that went nuts. Probably get into shorting mode here for some stuff. So yeah, this is getting a bounce. This market is so parabolic, it's ridiculous. I mean, I got to get into shorting mode here for some coins. So looking at Ripple, we're definitely seeing big signs of weakness here. I'd be very, very surprised if this lasts. I mean, we broke out the all-time high. Sellers stepped in. The price crashed. Right? Now it's bouncing. If I were to use an extension, this is actually something that I'm going to be watching closely for potential like longer swing trade short. I was probing with some day trade shorts yesterday when we were up above before this drop yesterday morning in the room. All right, so I would say that on the extension, we kind of creeped up above this 1.618. And I would say if I were to use a retracement, you get those bounce plays. If we creep up back to this area, I'll probably probe a short on low leverage, maybe like 1x, and hold it for a while. Although I think the lending rates on Poloniex are ridiculous right now, so might not always be advantageous to short. And so here's the thing with Bitcoin. I'll tell you my plan going forward with Bitcoin since I'm 80% Bitcoin right now. I have zero intentions of shorting Bitcoin because if it makes a bigger move, then shorting could be dangerous. But if the markets dump, just like last week when I jumped in the room and we did, some of you were in the room for this when we scalped the bounce play on this pullback. Really nice bounce plays on here. There's some people who made, you know, a Bitcoin or so in, you know, 10 minutes or whatnot, scalping this, right? So pretty good day. A lot of people in the room made some money, various different amounts. And this is some good scalping. And so that's my game plan, folks. I don't need to try to call a top with Bitcoin. My plan is I sell on spot regularly into strength, regardless of the price point. The higher it goes, the more I sell, the more profit I take off the table. My goal is to eventually sell 50% of all my Bitcoin. I'm going to have some that I have as an investment. I'm going to keep some that I'm obviously going to have for my trading capital. And then the rest, I'm locking in hard profit. I've been very clear with that message, and I will continue to hammer that message. When we came up here, I sold 3% of my stash. Once we hit 2,000, if we hit 2,000, I'll probably sell another 3 or 5%. And if we really go parabolic, the higher we go, the bigger the percentage I'll get in selling my Bitcoin. And don't get me wrong, I'm hardcore Bitcoin, but there has to be a point where you take long-term profit off of the table, right? And I've been accumulating for most of 2015 and 2016 with a fairly low cost basis on Bitcoin. So locked in a ton of profit off of these altcoins, moving up, tripled my Bitcoin holding. Now I have to think about an exit strategy, big picture. Because guess what? Once we hit a bear trend reversal, you know, I will have locked in a bunch of my profit. And the rest I can hedge through shorting, scalping, so on and so forth. As far as trading is concerned, every time Bitcoin dumps or has corrections or anything along the way, I'm going to scalp. I'm going to scalp it. I'll jump in the room if I'm not busy doing something else, and we'll scalp it. And we'll make more money scalping it on BitMax. So that's my game plan. So I don't really care. Bitcoin goes up. Yay, I make more money on spot. Bitcoin dumps. Great. I'll scalp it and I'll make more Bitcoin, therefore make more money. So that's it. That's my plan. Those are the markets that I'm going to focus on today for today's video. We will look at more markets during today's noon check-in to see if we can find some other opportunities or to answer any of your questions. So we'll do a general Q&A. That's it for this video. I will see you guys later. Cheers.